I'm attorney Laura Anthony, founding partner of Anthony Linder and Kakamanolis, author of the Securities Law blog, and creator of the ALC Lawcast. Today, I'm going to discuss the much anticipated SEC proposal to allow domestic public companies to voluntarily transition from quarterly to semi-annual reporting. The proposed rule does not impact foreign private issuers. A change from quarterly to semi-annual reporting has been talked about for years and reflects an understanding of our public company issuer base, which ranges from trillion-dollar technology giants to pre-revenue biotechnology firms. The mechanism for semi-annual reporting would be the new Form 10-S. Companies subject to the SEC reporting obligations would be permitted to satisfy their interim reporting requirements by filing one semi-annual report on Form 10-S in lieu of 3 quarterly reports on Form 10-Q. A Form 10-S would be due 40 days from the end of the second quarter for large accelerated and accelerated filers, and within 45 days for non-accelerated and smaller reporting companies. These deadlines would be bright line rules that require strict compliance to maintain current and timely status for purposes of S-3 registration statement eligibility. The Form 10-S would be substantially similar to the current Form 10-Q, but would contain semi-annual current financial statements compared to the same period in the prior year. Likewise, each discussion item, such as management's discussion and analysis, would cover a 6-month period. A company that elects to move to semi-annual reporting would simply need to check a box and thereafter report on a semi-annual basis. There can be no flip-flopping back and forth between quarterly and semi-annual reporting, though quarterly financial information can always be provided via a results of operations Form 8-K. Although the mechanics are straightforward, the shift to semi-annual reporting introduces new variables related to transaction timing and staleness of information. Under current accounting rules, auditors can only provide negative assurance in a comfort letter if interim results are no more than 135 days old. In a semi-annual regime, a company will frequently find itself in a blackout period where its last reviewed financial statements are older than 135 days. To maintain deal readiness, companies may need to reset the clock via voluntarily quarterly reviews disclosed on Form 8-K or time shelf takedowns more precisely. The proposal ensures that filing Form 10-S on time satisfies the requirement to be current for Form S-3 eligibility. The longer gap between mandated reports means that forward incorporation by reference of Form 8-Ks will become the primary mechanism to keep a shelf prospectus updated with material developments. As I've discussed in other lawcasts, the SEC also has a rule proposal on the table which will expand the ability to use forward incorporation by reference to include most listed companies. Another consideration is the impact on corporate governance and insider trading compliance. A 6-month gap creates a longer dark period during which material non-public information can accumulate. Boards must recalibrate insider trading policies and trading windows, which are traditionally tied to quarterly earnings releases. For exchange-listed securities, the shift to semi-annual reporting requires a careful synchronization between SEC mandates and listing standards of the NASDAQ and New York Stock Exchange. Historically, both exchanges have mandated quarterly reporting as a cornerstone of continued listing eligibility. The proposal aims to harmonize these rules, allowing the standard U.S. domestic reporting cadence to align with the flexibility already afforded to foreign private issuers. As of today, the majority of the comments on the rule proposal have been negative, but the comment period is young and not many institutions have opined yet. I personally am in favor of the option. So many companies are negatively impacted by the quarterly reporting pressure, both in time and expense, when not much has changed and they could be focusing on growing the underlying business. I'll continue to report on this significant proposal. Stay tuned.